Ladies and gentlemen, good morning and welcome to the Q1 FY23 earnings conference call of Bharat Electronics Limited, hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Renu Baid from IIFL Securities Limited. Thank you, and over to you, ma'am.
Thank you. Very good morning, ladies and gentlemen. Today we have with us the management of Bharat Electronics to discuss the 1Q FY23 results and the outlook going ahead. The management today is represented by Mrs. Ananthi Ramalingam, Chairman and Managing Director in charge and Director Marketing, Mr. Dinesh Batra, Director Finance, Mr. Damodar Bhattar, GM Finance, and Mr. Srinivas, Company Secretary. Without taking much time, I would now like to hand over the call to Mrs. Ananthi Ramalingam for her opening remarks. Thereafter, we can start the session with Q&A. Thank you, and over to you, ma'am.
Good morning, and thank you, Mrs. Renu. We have, as you all know, we have done very well in the Q1 of this year. The results have already been declared, and you must have seen that. So maybe to save time on the discussion, I would just request our Director of Finance to give a few of the salient features of the Q1 performance, and then we go into the Q&A because we need to close it at around that sharp 11 o'clock.
Yeah. Good morning to all of you. I am Dinesh Batra, Director of Finance, Bharat Electronics Limited. I'm very pleased to share about our Q1 performance. In the Q1, we have clocked turnover of 3,064 crores, which is a growth of 95% YOY. Our profit before tax is at 578 crores and profit after tax at 431 crores. And with these figures, we are maintaining our guidance of 15% growth on the annual basis, FY23, and our EBITDA, which we told from 21 to 23%, and we are quite hopeful of maintaining it around 23. Our material consumption in the Q1 has come down to 61.95% from the 64.95% from the corresponding quarter of previous year, which is 3% down, and which indicates what we told that our attention is on the material consumption, and we are quite hopeful to bring it 200 BPS points from the previous year, which was at around 60% for the complete year, and this year we are quite hopeful to bring it down to 58 around. Our employee benefit expenses also have come down from the quarter of the previous year, and we are having a higher other income, and this year we have received 78 crores from our associate company and special dividend from GEBE. And our order book position is standing at the end of on the 1st July, 55,300 crores. And just to give you a glimpse of what major orders we have executed during Q1, we have done LRSAM, Akash Missile System, IACCS, FNET, and CSS Phase 2. So these are the major highlights of the Q1 financial. And again, I'm reiterating with this figures of Q1, we are confident of achieving 15% growth on the complete year. And with this, I hand over it back to CMD, madam.
Yes, Mrs. Renu, we can continue further with the Q&A.
Thank you very much.
Can we start the Q&A?
Yes, ma'am. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankur Sharma from HDFC Life. Please go ahead.
Yeah. Hi, good morning, ma'am. Thanks for your time. 3 questions from my side. One, clearly we've seen this very strong execution come through in Q1, post a weak Q4. And I remember you said there were chip shortages, which had affected sales in Q4. And I'm clearly seeing some of that, kind of going away. So if you could just update us, how are we placed on that front? Have supplies improved? Do you believe, as we go into the forthcoming quarters, that should become less of a concern? And we are also hearing from some of the chip manufacturers also that, supplies have obviously gotten much better. So some comments from your side.
Yes, Mr. Ankur, supplies have started, resumption has started. For the last quarter, in the last Q4 of last year, we had told that around 2,600 crores of our sales had got impacted due to the chip shortage issues. Mm-hmm. And we are very happy to say that out of that, about 821 we could liquidate in the first quarter. So 821 crores got liquidated. And the good part is that most of the chip manufacturers have now started giving us a commitment. So with those commitments, we are quite confident that it will be a little tight, but we will be able to meet our guidance of 15% growth.
Okay, perfect. Okay, that's good to know. Ma'am, second question would be on the order inflows. Clearly, Q1 obviously has always been a weakish quarter. The first half normally is a weakish quarter for us. And then it's always been more of a second half when we see a substantial pickup in ordering. So if you could just highlight, the mix of orders, which you expect to book this year, both the larger size and, the regular radars and the smaller size, the optronics and the communication devices, etc. So just some color there, which are some of the larger projects and some medium-sized projects which you think could come our way to, kind of help us get to that 19,000 crore number, which we are targeting for this year?
Yeah. Yes, we are still retaining the guidance of 18-19. In fact, we are hoping that we will be able to touch 20,000 crores of order acquisition this year. As of now, I think around 850 crores have been acquired by us. And the major projects which we are likely to acquire in the months in the coming months are Akash Prime, which will again be an order from BDL for about 4,000 crores. We have the Him Shakti order of electronic warfare system, land-based electronic warfare systems, which we were expecting to get it in the month of March itself, will now come through. That is around 3,200. Then there is a radar, Arudra radar for the Air Force, which we are targeting at around 3,000 crores. Then we have the midlife our helicopter EW system for Mi-17 helicopters, which is around 1,500 crores. We have recently DAC has given approval for the WLR of another 12 numbers, which is about 1,000 crores. Then we have the lot of ship-based programs. So NGMV, NGOPV, and NPV, CTS, all these ship-based programs are we've already tendered out, and shipbuilders have one or the other shipbuilder has become L1, and there are umpteen buyer-nominated equipments in these. So each one of them is roughly on an average about 2,500 from Dell's kitty. And then we have, other than this, for the naval fire, we have another project called the Lynx U2, which is a fire control system, for which we have received an RFP separately, and the bid has also been submitted. So this is also a high-value project of over 2,500 crores. Then we have BMP. AMCs are there, and of course the BMP upgrade program, which again we were thinking that it will happen last year, is likely to come through in this year. That will be around 2,000 crores. And these regular orders of AMC spares and then small orders of different types of communication equipment and others will continue. So we are quite hopeful of touching a reasonable figure of 20,000 crores this year. Some civil side also, some 500 crores will be there, a minimum of 500 crores. So base will still be maintained. So over and above the base, whatever is the major orders I have just listed now.
I got it. Great. Good to know that. And just a last question. We've seen this big jump in, other income. So just trying to understand what's driving that jump. Is it more because of higher cash balances, and therefore, if you could also help us on the debtor and the receivable position as well on the balance sheet. Yeah, that's all from my side. Thanks.
Yeah, you are very right. We have a higher cash balances, so the interest income has gone up, and now as interest rates are also firming up, so we are getting good returns. Also, as in my opening remark I told, this year, in Q1, we have received 78 crores of a special dividend from our associate company, GEB. So these two are the reasons for the higher other income.
And on the debtor position, sir, if you could help us.
Mr. Sharma, I would request you to rejoin the queue, please. There are many other participants waiting for their turn.
Okay, thanks.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to answer questions from all the participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Ranjit Sivaraman from Mahindra Manulife Mutual Fund. Please go ahead.
Yeah, hi sir. Hi ma'am. Congrats on good set of numbers. You had mentioned last time around 2,700 crores of supplies impacted due to chip shortage. So is that complete 2,700 crore done, and do you feel that there is yet more in that?
Out of that 2,600, we could liquidate 821 crores exactly in the first quarter, and the remaining will get liquidated in 500 in Q2 and the remaining in Q3, Q4. So we have started shipments from the chip manufacturer, so we are confident of liquidating the whole 2,600 by Q4 of this year.
Okay, so this additional amount will continue to happen in next couple of quarters also till this normalizes. Is that understanding?
Yes.
Okay, and ma'am, we had talked about the smart city investment, 1,500 crore.
Yes.
So what is the status over there?
We as I had told you last time also, we have given a final proposal to the UP government as well as the Ministry of Housing and Urban Affairs. They are now trying to take approval for that. So maybe another month or so, they said that they will be able to get the final administrative approval, post which they will call us for a discussion on how to implement the project. But we are sure that it will start somewhere before in September, October, and a large portion of it we may have to do it in the current financial year itself.
Okay, ma'am. I'll join for further question. Thanks for this.
Sure. Thank
you.
So much. Thank you.
The next question is from the line of Lavina Quadros from Jefferies. Please go ahead.
Yeah. Hi, ma'am. Just wanted to check something. Because of chip shortages, you've actually seen revenue growth being very strong in 1Q. So you have a backlog which should have been executed last year, which has been executed in the course of this year. Do you think you can actually beat the 15% revenue growth number of this year? Or is it that this impacted revenue of last year is factored in your guidance? Just to understand.
No, see, all the other projects also, the commitments from the semiconductor manufacturers are not in line with what we had anticipated. There has been delay. So a cumulative delay will always be there, and the remaining projects also, a part of it is getting affected. So we will try, but 15% we are very confident. Over and above that, we'll have to really see how it all pans out maybe in the next 6 months.
Okay, thank you. And ma'am, lastly, with the war in Russia-Ukraine, are you seeing any additional commentary from the ministry to accelerate indigenization, or any commentary, any reforms you think that could come up further or from the ministry in order to... The ministry has already indicated to us that we should no longer be dependent on Russian and Ukraine suppliers. So they have asked us to find alternatives.
and preferably indigenous ones. So they have been singled out, and then a lot of indigenous actions have been initiated. So most of them we have found that we have at least given them a roadmap on when and how we will be able to indigenize it. And in addition to that, they are now asking us whether we can take up the maintenance of Russian platforms. See, all these platforms have a lot of electronics in it. So ministry has asked us, and we are examining it, and looks like we'll be able to do it. But I mean, just the operations of these systems may not be a big problem. But then, if we have to support them with a lot of spares and other things, that we are trying to examine and see how much time it would take, and whether it is better to use our own system in place of the system which is already there. So that detailed discussion is going on with the ministry. But this is a very good opportunity for us. We are also trying to encash on it, but maybe we will get some more details in another 2 to 3 months.
Thank you.
Thank you.
Thank you. The next question is from the line of Vishal Biraiya from Max Life Insurance. Please go ahead.
Hello. Thank you. Ma'am, good morning. The indigenization was somewhere around 45% of the BOM that we have, which used to be about 50% earlier. So in the next few years, what would be your internal target as to where would we want this indigenization to be?
Indigenization, I don't know whether you have got it right. See, what we were telling is in the turnover of about 15,000 crores, if you see, 80 to 82% is from indigenous technology. That is either BEL developed or DRDO developed. And in that, most of them also have a foreign content in it because we do not have, everything is not made within the country, so material cost is also there. So material cost, that is why we were telling that it is standing at 64%, we will try to reduce it by doing a lot of indigenous development work. So it is at the subsystem or the component level. But at the main system level, already a lot of work has happened, and as I told you, 82% of the turnover is coming from indigenous technologies. Out of that 50%, out of the 82%, maybe around 40 to 42 is from DRDO, and remaining 40 is from BEL's own developed products and systems. Is it clear? Is that what you wanted?
Yes. Yeah, absolutely. So I was just trying to understand this 42%, 43% that BL indigenously does. Can this, yes. To what extent will this increase over the next few years? Are there any internal targets that you would like to share?
Yeah. See, our internal target is to have full 100% BEL developed. We also, because DRDO also is, of course, we are the most preferential partners for DRDO, but then DRDO also, you all know that they have got a policy, they have also started opening up. So it's not that all technology comes to us. The only major programs or programs which are very complex and very critical in nature, they prefer some company like BEL who has got a lot of experience. So smaller ones, we are not very sure. So it will surely go up. In fact, long back, if you see about 5 to 6 years back, most of our indigenous products and systems were either from DRDO or some other academic institutions. Now it is not so. So we have slowly crossed 40%. And as you rightly said, we have a target. We have a target of reaching up to 75%. And a lot of development work is happening on the civilian business side, especially for Airport Authority of India. Whatever requirement they have, we are trying to customize whatever solutions we have to meet their requirements. And we are doing a lot of work for rail and metro business, for railways. So all these are purely indigenous. We are not taking technology, or we are not collaborating with any other institution for this. So once this comes through, surely the indigenous, whatever is the turnover from our own developed products and systems will surely go.
Sure. Just one last thing. We were developing the TCAS system for railways. So, and the approval was pending. So where are we currently based on that?
No, development is going on, but the development is going on at a very, it is quite not in a very normal, and in fact it is much more than what we had anticipated. Good development work has happened. But for submission for taking up the certification, it may take a little more time, because we are trying out. This is a domain which is new to us. So whatever domain knowledge we had for the services, we are now trying to customize. So a lot of other issues keep coming up now and then. But the development is on the right track, and hopefully another 6 months we should get the certification.
Whatever we have done for metro.
For metro, anyway, we have already completed the trial order which the DMRC had given us, and they are quite happy with that. And now they are planning. They have already issued a circular to all the other metros that this particular solution has to be indigenous. They cannot import it. So it has already been put under the banned list.
Okay, and just to understand.
I'm sorry to interrupt, Mr. Biraya. You'll have to rejoin the queue.
I'll do that. Thank you.
Thank you. The next before we could take the next question, I would remind the participants to press star and 1. The next question is from the line of Amit Mahavar from Edelweiss. Please go ahead.
Thank you. I just have 2 questions. First is on the some of the large platforms, what are the timelines, especially on QR SAM, MR SAM, the LR SAM phase 2 seems to be delayed, and then CIWS. So these 3-4 large projects, can you share the timelines? And you can also include IACC 2 or LCH, EW suits. That's my first question, ma'am.
Yeah, as far as LR SAM phase 2 is concerned, we have also not been, we really do not know when it will happen. We have, of course, there is a rethinking in Navy whether they should go ahead with the current solution or the one which is developed by DRDO. But the one which is developed by DRDO is also, we are working with them for both the radar as well as the weapon control system. So either way, it will be good for us. But then we are not able to really commit on the timelines as far as LR SAM phase 2 is concerned. But for QR SAM, we have already given a budgetary quote, and Army is going to take up the AON, that is acceptance of necessity for this particular case, maybe another couple of months, and post which they may order about for QR SAM for about 2 regiments. This is what the total requirement is for 4 regiments, but what we heard is that they will initially go for 2 regiments and then follow it up with another 2 maybe after a couple of years. As far as MR SAM is concerned, MR SAM Air Force also, now we have the firing unit which was delivered by IAI for the contract which they got or directly from DRDO, that has already been completed. The firing trials have happened, post which Air Force has asked us to give a budgetary quote for taking up necessary approvals. So we are in the finalization of budgetary quote is in progress at BEL, and maybe we'll be able to submit in another fortnight, post which they will take up for the approval. So I think QR SAM as well as MR SAM may happen in the next year, 23-24, yes. Because after they take the AON, then the RFP will be issued, then we will respond to the RFP, then the negotiation will happen, then CFA approval. So most likely it will be 23-24.
Okay, fair point. And second,
as far as EW systems are concerned, we are still to receive any formal response from HAL on this, on both the LCH and ALH. But of course, the ministry has already told that it will be a BEL solution. But when exactly this will happen, we are also not very clear, because the existing order of ALH is still being executed by HAL. So post which the second lot of ALH order which they get only, they will be trying to fit our EW suit.
Got it, ma'am. And second question is on your imports. Of all the total imports that BEL has, so what is the share of imports from particularly Russia and separately from Ukraine, if you can spell out? And this far, have we got any impact, in terms of overall disruption that we have? So broadly, you can share the import share of specifically Russia and Ukraine separately. Thank you.
See, the import share of Russia and Ukraine will not be very high. It will be less than 5%. See, mainly from Russia, we buy a lot of components which are used in all the tanks, T-90, T-72 tanks. So maybe around 300 crores, very less. And Ukraine also, our vendor base in Ukraine is also not very high. It is only for some 5-6 suppliers. That is why we are not affected. from the supply, these issues of the post-Russia-Ukraine crisis.
Fair point. Got it, ma'am. Thank you and best of luck.
Thank you.
The next question is from the line of Amit Pinde from Morgan Stanley. Please go ahead.
Yes, sir. I just had a question on the top line, your guidance of 15%. How much of semiconductor surprise can come through, which could raise the revenue growth guidance by? Because if I look at last year's numbers, you said that 2,600 crore was the miss on account of semiconductor shortage. So effectively, we would reach about 17,900, 18,000 crore of top line, which is exactly equal to the semiconductor shortage that we had last year. So are we suggesting that, there's no big real growth this year on account of semi issues?
It's not true. In fact, like last year, whatever became shortfall on account of semiconductor, we tried to fulfill through some other projects. So it's not that the total growth is coming from the whatever we are completing the last year shortage. It's not so. This is a real growth, and to grow at the rate of 15%, it's I feel even that is a struggle. So last year, it's not that we could have done some of the shortfall on the account of semiconductor. We try to fulfill from the other projects.
Let me, sir, ask you differently. If I look at the 15% growth, it implies only 6% growth for the balance 9 months of the 3 quarters of the year remaining. So is that number, suggesting some issue on the backlog, some slow-moving orders there?
No, it is not that. See, as I told you, for the remaining projects also, there is not a clear commitment we have not got as far as the semiconductors are concerned. So wherever the semiconductor commitments have been received by us, based on that, we are giving a guidance of 15%. So in that 15%.
Yes, so that's what I was asking. That if you receive the commitment, ma'am, what could be the run rate? Could it be 20%? Could it be 25%? If you get all the commitments that you right now not having.
Yeah, it will be difficult for us to tell. See, but finally, even if we get the commitment, we need to see whether we have the capacity, we have the SBUs which will be able to handle them. So all these issues will be discussed as and when it comes through. So, but there is a possibility that it can go up also if all these issues are resolved. But then right now we also don't want to give some commitment or something which we are not very sure of.
And in fact, if you see the FY22 Q1, we were around.
What was estimated?
Pardon?
Sorry, sir. I was just asking what could be the civil revenue growth for the year?
This will be
civil part of the business.
Yeah. No, out of as you said, 17,900 around what we will be able to clock. Some 15% will be coming from the civil segment.
15% of revenue would be civil. So that would be a growth of 20%? For civil portion?
What is the growth of the civil? Our civil is yet to happen in a real way. As CMD was telling, that a lot of projects are under development from the rail, metro and civil aviation, where in fact they were not giving orders in the indigenous market, Indian market till now. So now when that will happen, and that will start happening from 23-24 for the next 5 years. So real growth we will talk in the civil segment then. Today what I'm saying, out of 18,000 crores around, the 15% will be coming in this year from the civil segment.
Okay, thank you so much, sir.
Yeah. See, one more point which I would like to tell you is, see, last year, as DF was also telling, we compensated for that 2,600 to some extent by pulling up some of the smaller projects which we had planned for execution in this current year. So that portion is already gone. So that comfort is not there. See, we always keep some small projects which can be, for which we can realize the revenue quickly. We keep such projects, but those projects have all been exhausted.
Yeah, ma'am, that reconciles it. Thank you so much.
Yeah. Thank you.
Thank you. The next question is from the line of Nitin Arora from Axis Mutual Funds. Please go ahead.
Hi, ma'am. Morning. Ma'am, can you update us on this Himshakti order, the electronic warfare system? It's been taking quite long. Can you tell us exactly where it is stuck, this upgradation part of the Samyukta one? That's my first question.
See, actually, it has not got stuck. What happened was at the time of when the final CFA approval was to be taken, Army thought that they can take the latest one because some more technology upgradation they were looking at whether that can happen within the same project. Mm-hmm. So that discussion happened. We also examined and we said a portion of it we'll be able to handle, but not the complete one. So what we are now proposing is that they will take it up in two different contracts. One will be the earlier one as it is, and one the upgrade one, which will have whatever the the latest technologies which Army is asking for. So that decision took little time. So the acquisition wing also finally told them to have process it as two separate orders. So the statement of case for the second order has just been made, but the first order is in the pipeline. I think it has gone to the NSCS, National Secretariat Council. No? It has gone there, and most probably once it comes back, then it will go to CCS directly. Once CCS approval is obtained, we should be getting the order.
And ma'am, in this 3,200 crore which you mentioned, has there been a revision in the contract price, and is that yours, and ECIL will also be a part of it? Just one clarification I wanted on this.
No, there is no revision in the price. It is the same only. And ECIL is our vendor in this. A portion of it we are buying from ECIL. That's it. Right. Yes.
Getting it. And ma'am, any update on the Arudra radar on the development side? That's my last question.
Yeah, Arudra radar already CNC is on. It is likely to be concluded shortly, and then it's a very clean case. It is under the approval of Raksha Mantri only. So another 2-3 months, I think we should be getting that order.
So it will come this year, or FY24 is one should look?
This year.
Both will come this year.
Both will come. Yes.
Got it. Thank you so much, ma'am. All the best.
Thank you.
Thank you. The next question is from the line of Harshit Patel from Equirus Securities. Please go ahead.
Hi, thank you very much for the opportunity. My first question would be on our capex plans, ma'am. So could you give us an update on the capex that we were doing at multiple locations like Palasamudram, Nimaluru, Nagpur? What is the status, when they will be commercialized, and what would be our overall capex outlook for the next 2 years?
Yeah, these are all projects we told. These all were part of our around 3,000 crores of capex, which we had planned, and out of which some 2,000 crores has already happened. And Nimaluru is very nearing completion, and this year I'm very hopeful it will get completed. Nagpur land has been acquired, and now the perimeter wall, etc. construction is on. Palasamudram, there was an issue of certain, limitations being put up by the authorities as they had brought it into the red zone, and certain clarifications, etc. were required. And so those discussions are going on, and I'm quite hopeful that now our building plans, etc. will be finalized after getting the clarification from the Andhra Pradesh industrial authorities. And all other projects are underway, whatever capex we had planned. This year, we are hopeful of achieving around 1,000 crores of capex. And most of our capex plans are on the way. It means underway and as we had scheduled. Except this Anantapur, that is Palasamudram is called, where some land issues from the authorities were cropped up after our acquiring of land.
Sure. Understood, sir. Thank you very much for the update. My second question would be on our content in LCA Tejas Mark 1A. I believe we are already supplying DFCC, that is Digital Flight Control Computer, and also ADC. So apart from that, what are the other products that are going into LCA Mark 1A? So out of 36,000 crore order that HAL has got, so out of that, what is passed on to us? Now, on top of that, whenever the Uttam radar will come into picture, I think right now we are buying it from one of the Israeli companies. But when Uttam SR radar will going into it, does that improve our content in that particular project? What part we will be playing in that particular radar project?
Yeah, other than the DFCC air data computer, we are supplying a lot of weapon systems packages like that pylon interface box and other boxes. So altogether, our share is about 3,300 crores, about 10%. Currently, we have already got the order from HAL. And as you rightly said, once the Uttam radar is approved, then for the production agency of Uttam radar is Bell only. Bell had only manufactured the prototype also, and that is now subjected to trials. So this should increase our content. Maybe each radar may be about 50 to 60 crores.
Okay, sure. So this will be
take right now. They may go in for some 50% of imported or 50% of indigenous. That this thing is not yet finalized. The proportion is not yet finalized. The ratio is not finalized. So post which we will be able to give you a firm indication of our contribution to LCA Mark 1A.
Understood, ma'am. Ma'am, just a follow-up to that. As you rightly mentioned, our content is right now 10 to 12% of the overall order, so around 3,000 crore. So where this 10 to 12% number can go up in the future projects like LCA Mark 2, AMCA, can we have something like 20-25% kind of content, or would that be too much?
No. We are also targeting about 20 to 25%. See, the main is we are now developing the EW suit, which also they were procuring earlier from a company called Saab of Europe. So the EW suit as well as the radar and the mission computer also, if it gets delivered from Bell, then the content will obviously go up much more than 25%.
Understood, ma'am. Ma'am, thank you very much for answering my questions. That will be from me.
Thank you. The next question is from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. The question is, more on the possible order that you see from the rotary wing platforms of HAL over the next couple of years. What can the potential order intake be? And just to understand the radar warning receiver and the MOS in Tejas Mark 1, will that come to BEL or will it come to some, will it come to India as a competitive tender, or what's your view on that?
See, as I was mentioning earlier, right now it is an imported source which HAL is getting for the EWC, as far as EWC is concerned. But parallelly we are developing it, and then we have also been told by HAL has also been told that they should stop importing henceforth. So that will surely happen. Not only the radar warning receiver MOS, but also we are targeting DIRCM, directed infrared countermeasure system. So if that also comes through, it will surely go up much further. And of course, the radar.
But just to add a follow up here, because you have got interestingly the RWR and the MOS order of C295, right? So those are also for the back-ended production in India, or?
No, they are. Pardon?
So those deliveries would be for the second batch, would be produced in India.
Oh, completely it will be produced in India. No, you are telling about the aircraft or the
C295, yeah, aircrafts, yes. Because there will be a first batch would be flown in, and the second batch would be produced here. So for this order is for the second batch.
Pardon?
So this order of C295 is for the second batch, right? That will be produced in India.
For the complete. It is for the complete. See, as you rightly said, some aircrafts are getting delivered directly by Airbus. Remaining will be done along with Tatas in India. But this order which you have got is for the complete lot.
Okay, and so then why is this dichotomy between, say, a Tejas Mark 1A and can't there be cross-marketed, or?
See, LCA Mark 1A or Tejas is a fighter aircraft, whereas C-295 is a transport aircraft. So the requirements are slightly different.
Yeah, that's true. Yeah, absolutely. But I'm saying, can't these capabilities be cross-marketed or?
No. It can be, but that is why I said that development is happening. See, in a helicopter, you will have to, that the form fit also is very, very important. It has to be as light as possible because the space there is very less. So all this customization and some technological development is happening now. And we are quite confident that maybe after some few numbers, they should be able to take our solution.
Okay, sure. And just one couple of lines on the rotary aircraft possible order flow that you see over the next couple of years, and that would be from.
For all the other rotary aircraft like ALH, LCH, so we are already supplying the Compass, that is that electro-optic payload, which is manufactured at our Chennai plant, that is being supplied. Then we are also supplying the what is that? Head-up display also we are supplying from our Panchkula unit. And slowly we are trying to see whether we will be able to pitch in our EW system along with the DERCON. Yeah.
Okay. Got it. That's all from my side. Thank you.
Yeah.
Thank you. The next question is from the line of Vishal Viraya from Max Life Insurance. Please go ahead.
Yeah. So just coming back to the railway TCAS order, what would be the potential size? Because it seems that it could be 7 crores per kilometer as the opportunity. So how big is the portion that you are targeting? Okay. Total market size is 12,000.
Maybe around 12,000 crores. I mean, of course, it's a rough estimate. It is not a very detailed one, but it will be around 10 to 12,000 crores.
The complete sale.
This is a major portion.
And of this, what would be imported?
Pardon?
Of this 10 to 12,000 crores, what would be imported currently, or all of it?
All of it is getting imported.
Okay. And when you mentioned, when you mentioned that DMRC has written to the other metros that this should not be imported anymore, so can this 10 to 12,000 crores?
Not the TCAS, it is that ATS, that automatic train supervisory system.
Okay. And this 10 to 12,000 crores is we are referring to TCAS?
Yeah, exactly.
Okay. And we received approval for the metro side. The railways are still in trials.
Railways are still on trials. Yes.
Okay. Fair enough, madam. Thank you.
Thank you.
Thank you. The next question is from the line of Harshit Kapadia from Elara Capital. Please go ahead.
Thank you for the opportunity and congrats for a good set of numbers. A couple of questions from my side. Sir, can you also help us with the EBITDA margin guidance for FY23, given that your material cost consumption is going to come down by 200 bps? So can we expect a sharp rise in the EBITDA margin for FY23?
Yeah, I'm maintaining the margin around 21 to 23 when I give the range, but I'm very hopeful of coming around 23, and that is after taking into account of some 200 BPS point reduction in the material consumption. But that is the whole year we have to control it as the prices are increasing. Inflation is going up, etc. Interest rates are farming. So that will be a big challenge to maintain it around 23, but we are very hopeful because we have not to take into account only the material consumption, but there are other expenses also. So we are keeping close watch on those. So we will maintain it around 21 to 23%.
Fair enough, sir. So a couple of questions on non-defense side. So can we expect the execution of the EVM and VVPAT order to be done in this FY23?
Partially in FY23, maybe about 40%, because this also got affected because of the semiconductor chip shortage. So now just last week we got a commitment from the supplier. So a part of it is will get delivered by March, that is Q4 of this year, and the remaining will be Q1 of next year. So maybe in the ratio of 40 to 60.
Understood. And the order size for this was close to 4,000 crores. Is that correct, ma'am?
No, 1,500 crores.
1,500 crores, sorry.
Yeah.
And could you help us, to get more clarity on the space electronics? I know we had lost out on the first tender. Are you seeing more tenders coming out from the space side on the rocket? I can highlight it.
No other tender has come through, but we are in discussion with ISRO. We are just seeing if there is any other opportunity which will come through. Meanwhile, L&T has asked us whether we will be interested in manufacturing some of that orders which they are getting for the PSLV rocket launches. So we are in discussion with them. We'll have to see if it is viable, and if it makes sense for us, we will start that.
Okay. Yeah. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Venkatesh from Logic Tree. Please go ahead.
Yes, ma'am. Good morning. My question is in terms of the order book. If out of the total order book of 55,000 crores, if we are able to execute 18,000 odd crores this year, the remaining would get executed. Would it be fair to say over the next 2 years? This is FY24 and 25. And if it is the case, what kind of replenishment of orders do you expect over the next 2 years to keep going on from FY25 onwards?
See, after maybe, as I told you, next year we will be getting both QR-SAM and MR-SAM. These are all big orders. See,
Okay.
QR-SAM is in the range of 20,000 crores, and MR-SAM also will be in the range of 15 to 20,000 crores. So once those orders come up, the order book will really shoot up. So what we are now telling is the normal orders which we have been getting for the last 2-3 years. See, just like how we got Akash 7th Squadron order and LR-SAM order, that really made us to jump, go beyond the 50,000 crore order book. So similar thing will happen in the next year also.
In fact, I would like to add on this. See, order book is a dynamic thing. It's not that today is 55,300 and it will be executed in next 2 years. They are with the staggered delivery depending on the platforms available. So, and it keeps on building up. If we are saying 20,000 crores order inflow this year and some 18,000 get executed, so it will be standing around at 60,000 next year. And that will get again executed next 2 to 3, 4 years. So it's a dynamic thing. It's very difficult to say that the whole thing will get executed.
Fine. Thank you, sir. And second question is in terms of, you talked about the shipbuilding orders. So if you talk about some of these shipping companies, shipyard companies in India, Mazagon, GRSC, what kind of order execution or order inflows do you think can happen with respect to shipyards this year, FY23?
Yeah, that is what we told you for NGMV. Yeah, NGO, OPV, NGMV, CTS, MPV, all together around 12,000 crores. FSS. So this year itself we are targeting for all these programs. The CNC is already concluded, and we are expecting the order any time now.
Okay. Okay, ma'am. Thank you very much. No problem. And sorry, ma'am, I'll just squeeze in one more. Exports opportunity, because I think the government is focused on defense exports opportunity. If you take a 3-year view, what percentage of our top line can be exports?
Ladies and gentlemen, we have lost the management connection. I'll connect them quickly. Give me a moment. Ladies and gentlemen, we have the management connected now. Mr. Venkatesh, you can proceed with your question.
Okay, ma'am. My last question was exports as a target. Internally, do you have a number that you think over the next few years you want to reach in terms of top line, or as a percentage of overall sales, whatever it makes sense to you, ma'am?
No, our target is to reach 10% of our turnover through exports, but currently it is very less. You are asking about exports, isn't it?
Yes. But is that not a very massive opportunity, ma'am, in terms, because I think we are looking at exporting more out of India in terms of electronics, defense, everything. Yeah.
True. But then, see, it has its own challenges. As I have been keeping on telling, of course, earlier we never used to get the clearances from all the services, but of late we are getting clearances, but conditional clearance that you will have to reduce the, whatever is the features or make it a little different and all that. So a lot of customization work is also required. So what happens is, many of the tenders which we participate, they ask us whether the equipment is readily available. So that puts a real challenge on us. So we are also a little selective, but then the opportunities are quite huge. And we are in the order acquisition front, we have done quite well last year. We got about $180 million. And this year we are targeting about 400 to 450 million US of acquisition. So if not now, hopefully in the next 2-3 years it should stabilize, and we should at least reach a target of about 10% of our turnover coming from exports. We have set up a lot of overseas marketing offices, and we are now at least started participating in all these tenders. That is a good point of it.
Sure. Okay, ma'am. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, this will be the last question for today. And the question is from the line of Bharat from CLSA. Please go ahead.
Yeah, good morning, ma'am, and congratulations on the improved execution. If I may request for details of the order inflows for the last year, FY22, some of the larger orders, if you can highlight, apart from the C29, the airborne electronic system, and IEWR, which we know, that will be helpful to get the details of 18,000 crores. Thank
you. The major orders you yourself have told, B29, then that IEWR.
But those are like 4,000 odd
Then some orders we got from CSL as well as GRSC, the shipyard, for the shallow water craft.
How much would be that, ma'am?
Then the avionics, that was around, totally it was around 3,500, I think. Then the avionics package from LCA. Then we got electronic warfare suit for the D29, and of course also the export order for C295. Then we had a Commander TI 540-90 tank, which was again around 900 crores. Then so I'll tell you the major ones. Then we had then we got some fuse orders also for our Pune plant. Then the major anti-drone system for all the 3 services. And some export orders, all put together around 1,900. I think major ones, 19,000. Major ones I have told you.
Yeah, and of this, avionics for LCA and EW, sort of a D29, if you can help us with the value, please.
D29 was around 1,000. Sure, huh? Around 1688 crores. And the avionics package was actually 1864, and altogether maybe around 3,000 crores, 3,200 crores or so.
Great. Thank you so much, and wish you best of luck.
Thank you.
Thank you. As that was the last question for today, I now hand the conference to Ms. Renu Baid from IIFL Securities. Over to you, ma'am.
Well, on behalf of IIFL Securities, I would like to thank the management of Bharat Electronics for giving us this opportunity to host the call. Ma'am and sir, would you like to make any closing comments before we close this call? Closing remarks?
No, the only remark is
Bharat,
that, yeah. So we maintain the guidance of 15% growth in revenue and about 21 to 23% of EBITDA margin and an order intake of minimum of 20,000 crores.
Thank you. On behalf of
Sure,
IIFL
thank you.
Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you, everyone.